And taxes, this is really the reason to do an ESOP. There's a section 1042 rollover. So many have heard of a 1031 exchange in real estate. 1031 exchange is you're selling a piece of property, you're going to buy a like piece of property. And because of that, you don't have to pay taxes on the capital gains that you earned on that property. You can defer those capital gains into the new property. This is a near identical rollover section. So it's section 1042 for businesses so that they can defer these capital gains. S Corp is another. This I think is one of the. This isn't really a seller benefit. It is because of what you're doing for your employees, but it's a huge benefit. It's how they accelerate their earnings and everything. These S Corp ESOPs are no longer taxed, so it's a trust. The trust owns the business, and the trust is not going to pay federal income tax. So all of the tax kind of burden goes away from these businesses, and they've got the ability to operate tax-free. If you've got a competitor, I like to use like an airport operator, right? So you got all the jets parked out there, they're selling the fuel, and you got two of them maybe on one airport. If one of them is an ESOP and one of them isn't, the one that's an ESOP has a significant competitive advantage to the FBO that's not an ESOP. Deductible contributions, interest and taxes and things are going to be, it's a business expense, so it's going to be expensed with the pre-tax dollars.